Hey everyone, welcome to another episode of AQ Markets. So today's topic is going to be fairly introductory, but it's targeted for people who are new to investing or who want to get into investing. And today's topic is going to basically be how to get started with investing and giving a breakdown of the underlying mechanism behind the stock market. So everyone knows what a stock is. It's a small ownership in a company in the form of shares, and these shares are traded on stock exchanges for people to buy and sell. Obviously, as traders and as investors, our goal is to buy low and sell high. So let's understand how exactly is all of this executed in the background. So there's three major components to the stock market. There's the market exchanges, there's the brokerage firms, and then there are the investors slash traders slash institutions. So the first piece of this is the market exchanges, or the stock exchanges. There's various stock exchanges all across the world, and they all have their predominant ones in each respective country. In the United States, our top two are the New York Stock Exchange, the NYSE, and the NASDAQ. So these exchanges serve as the record keepers and the data that is driven into the stocks. So when a company first decides to go public, they need to register with a stock exchange, and that's where they're going to present all of their company financial information, previous history, so forth and so on. So then now what the brokerage firms do is they are going to plug in to one of these stock exchanges or all of them, and they are going to get their live data from these exchanges. Now we have the investors or institutions or whoever is buying and selling the stocks. They're going to create the transactions based on the information that comes from the brokers, which is information that comes from the stock exchanges. They're going to create transactions, the brokerage firms are going to execute these transactions, and then send back this information to the stock exchange so that there's a proper record keeping of everything that happened between every single stock. So it's a three-piece puzzle. Ultimately, the stock exchange maintains and creates data. The brokerage firms are going to maintain all the transactions and send back that transactional data to the stock exchange, and then the investors are going to create the transactions that the brokerage firms are going to facilitate. So now that you have a basic understanding of how the stock market works, how do we get started? The first step is to sign up with a broker. There's various brokers across America and across the world. Primarily in America, a lot of people use Robinhood, they use E-Trade, there is TD Ameritrade, Interactive Brokers, there's many more to go. Now, I personally like to use Robinhood. They have a very simple mobile platform, and they're actually the ones that started zero commission fees. And basically, a while ago, back prior to like 2013, when you would create a transaction on your brokerage firms, they would charge a fee. That fee ranged from $5 to $12. It made it very difficult for individuals who really only had around hundreds of dollars or maybe even $1,000 to invest in the market, because a pretty substantial percent of it was already taken away because of these fees. So in 2013, when Robinhood was launched, their whole premise was to create commission-free trading. Now, subsequently, Charles Schwab, a major competitor in the field, they announced zero commission fees as well in October of 2019. So following that, all of the major competition essentially just made trading free now. The only catch is that most of the commission-free trading is only used for United States exchanges, in some cases Canadian exchanges as well. So if you want to trade international stocks, then there will be fees associated. So that's one thing to note. All right, so once you've picked your broker, the first step of the process is to be very, very well informed. When you are investing, you have to understand you're using real money. The goal here is to buy low and sell high. There's a lot of risks involved, so there's a lot of research behind this. Primarily, the research should be going into what sort of industries you want to get into, if you want to get into ETFs, if you want to get into stocks, and then when you go ahead and pick that, understanding the risks. For example, with COVID-19 running rampant across the whole world right now, there's so many risks, especially in the airline industry, especially in the hospitality industry. And then on the other hand, there's certain industries that are doing really well right now during the COVID-19 crisis, which is consumer staples and pharmaceutical companies. So understanding how the world works, understanding where the world trajectory is going, and understanding ultimately what sort of demand the consumers are going to be creating is how you should decide what stocks / ETFs you want to get into. Something I emphasize a lot when I'm telling my friends and family to get involved in investing is whatever investing you do now, make sure that you are thinking of the long term. Now, in short-term investing, it's very stressful. You're going to be very concerned that you might have been down for one day, maybe down for a full week, but at the end of the day, with all of the research that you do and the decision making you do, you should really consider what is the long-term potential of our investments. So I always emphasize that. Be very patient. Don't get worried about the short-term losses. Focus on the big picture. And the big picture is looking into your investment portfolio 1 year from now, 2 years from now, and even in some cases 5 years from now. Especially right now with COVID-19 concerns, the portfolio that I've structured, I am planning on looking back at it 2 to 3 years from now and then reaping the rewards then. I have incurred certain losses in some of the stocks I've picked. I've seen gains in the certain stocks I've picked, but at the end of the day, I'm going to be holding these positions for a few years to come. So to wrap everything up, just be disciplined, show some patience, and think only of the long term. It's very interesting to get into stocks. It keeps you informed about how the world works and what's going on in the world, and it allows us to build wealth over time, which is my #1 priority for my viewers. Now, if there's any other questions you have remaining about stock exchanges or stocks or brokerage firms or anything along those lines, please leave a comment below. I hope this was very instructional and very informative. Looking forward to the next video, and I hope you guys enjoyed it. Thank you.